So good afternoon, everyone. My name is Maurya Hanspal, and in this session, we're going to continue our sessions on mutual funds. So talking about the real estate mutual funds. So in case of a real estate mutual fund, you are investing into the mutual funds, which comprises of stock in the real estate sector. Like for example, if a mutual fund is investing into the into the DLF properties, Godrej properties, Purvanchal properties. Okay, so that's a real estate mutual fund. But the real estate industry is something which is a cyclical industry. And that industry, if that industry booms, it can give you a large number of profits and you can drive away with the profits. As we can see in the present day scenario, that the real estate industry is getting a boom, like through the budget or through the lower interest rate. And also the government is focusing on capital goods industries or like housing and all those schemes. So the real estate sector is like achieving a boom. Okay, but in the past year, like we can see from 10 to 12 years, the real estate sector was stagnant. And even the housing property prices also declined in that way. Okay, so after a big, long, difficult journey, the real estate sector is on a boom now. Okay, and the real estate sector is a kind of cyclical industry. Okay, that sometimes it tends to boom, and like when it falls a lot. Okay, so if a mutual fund is also it's only into the real estate stocks, it can be quite difficult for that mutual funds to get returns. Okay, so my advice is try to like diversify into various sectors. As in the beginning of the sessions on mutual funds, like when I was talking about the advantages of the mutual fund, I told you about the advantages of diversification. That if anyone would have invested into the hospitality sector stocks like before the COVID-19 pandemic, then his portfolio would have turned into negative. But if anyone would have also invested into the different sectors like the investment into your pharma, IT, metals, and real estate, his portfolio would have turned into positive or like given him returns. So the investing strategy is very important when you diversify your portfolio. The SEBI की जो regulations हैं, they require that at least 35% of the portfolio should be in the real estate assets. It means a mutual fund which has the real estate stocks within it must invest at least 35%. Minimum 35% they have to invest into the real estate stocks. And now like they can include your mortgage backed securities, your like real estate assets, equity shares or debentures like which are engaged in the real estate. And not less than 75% of the net assets of the scheme shall be in the physical assets and such securities. It means at least 75%. The minimum 75% instead of like investing into shares, stocks, debts, and like different kind of securities. You also have to invest in physical assets, plant, machinery, building, and all. Okay. Now the funds are the closed-ended funds, and they have to be listed on the stock exchange. Now, see, a new concept that comes into place is of the real estate investment trusts. Yeah, we have the concept of the real estate investment trust. The concept is just same as a mutual fund. Again, you have a trust, and the trust for a sponsor, and that's a point in AMC. And in that AMC, people contribute their money. And that's a real estate investment trust. And people are like contributing these money and people are getting the units of REITs. उनको REITs के units मिल रहे हैं. And if this organization or this asset management company or trust, as like whatever you call it, is taking the money. Okay. And where this money is invested, this money is being invested into high grade commercial properties. 80%, minimum 80% of the amount has to be invested into high grade commercial properties. And why high grade commercial properties? Because they will give you a fixed rent. Like for example, like the big top corporate companies who have occupied the office spaces. Okay, so that like provides them rent, and that cannot default because these are top big like the multinationals, conglomerates, or foreign companies, and they cannot default on their rent payment. In India, we have like three kinds of REITs. The largest REIT that we have is the Embassy Parks. Then the second one is the Mindspace, and the third one is the Brookfield in Delhi and NCR. The Mindspace is in Bangalore, Hyderabad, and the Brookfield is in Mumbai. Okay, so 80%. So how these persons who are like investing into REITs, they are able to make money. They're able to make money either through the capital appreciation of these properties, or in the form of dividends, because 90% has to be like compulsorily given as dividends. Now it says the real estate investment trusts are trusts registered with the Securities Exchange Board of India that invest in commercial real estate assets. The real estate investment trust will raise funds through an initial offer by way of public issue only. No initial offer of units by the real estate investment trust shall be made unless the real estate investment trust is registered with the Securities Exchange Board of India under this act. Now, the real estate investment trusts are the securities linked to the real estate that can be traded on the stock exchange once they get listed. Because all the Brookfield, Mindspace, Embassy Parks, they are listed on the stock exchange. It is similar to the concept of a mutual fund, where a fund pools in money from individuals and institutions and invest in equity and debt instruments. In case of REITs, the trust puts money in property. Okay, so basically in mutual funds, the mutual fund was investing into like different kinds of securities or equity, debt, and varied instruments. But in case of a REIT, they are investing into properties, and the investments can be made through a trust directly or via a special purpose vehicle. As I told you, the SPV I was talking about, कि या तो वो trust form कर देंगे, and this money like would be given to what? Like will be given to the SPV, and SPV would be transferring the money into market. So the real estate investment trust like similar to mutual funds. Like there are sponsors, trustees, fund managers, and unit holders. Unlike the mutual funds where the underlying assets is bonds, stocks, and gold, REITs invest in physical real estate, your commercial high-grade properties. See, your like real estate can invest into commercial properties. The real estate can invest into the real estate properties or a combination of two. They can also invest into the hospitality sectors also, like hospitals. Okay, because like these are also a large number of hospitals are being there on like rent also. Okay. And besides the regular income from rents and leases, gains from the capital appreciation of the real estate. से भी मिलते हैं. Okay. And they have to like distribute at least 90%. They have to give us dividends. Now you have the infrastructure debt funds and the infrastructure investment funds. And we call it as the invites. The invites. So the main difference between the real estate investment trust and the infrastructure. Yeah. The main difference between the real estate investment trust and the infrastructure investment trust is the real estate investment trust is like investing into the commercial properties, high grade properties, like which are actually built up. Whereas the infrastructure investment trust is also investing into securities which are under construction. Also your highways, your metros, your roads, and all these things as well. So that is the main difference. In India, we have the power grid, Indian Grid Trust, the power grid. Okay, so that is one thing that you need to look for. Then you have a fund of funds. So let me explain the concept of a fund of fund. Let me go to the drawing pad. Yeah. So what happens in a fund of fund? Basically, you are like investing your money into an asset management company or a mutual fund. Now this AMC is investing the money into other like fund like into the other fund house, and that fund house is like investing into market. And that happens mostly in case of the foreign funds. Like for example, in like fund of fund, you have the feeder fund. So what basically happens in a feeder fund, the money is being given to AMC, then like to other AMC. Okay, so basically in this case, a mutual fund is investing into some other mutual fund, and that money is going like somewhere in the market. So like this will charge you a commission, and this will also charge you a commission. Okay, and like because of the total commission, यहाँ पे भी charge हो, यहाँ पे भी charge हो, the expense ratio tends to be higher. Okay. But now, like we have the Motilal index funds, and all these funds are charging you a lower rate of commission for the sake of competition and all the other scenarios. Okay. Then you have a multi-asset allocation fund. So what do we mean by a multi-asset allocation fund? In case of a multi-asset allocation fund, you have to invest at least in 3 asset classes. At least in 3 asset classes. It can be your equity, your bond, your gold. At least in 3 asset classes, you have to invest. Okay. And nowadays, the gold is being like replaced by silver also. Like nowadays, we can see the gold is being like replaced by silver also. Okay. So we'll talk about the arbitrage fund